YouTube is up. What's up, guys? SENNHEISER here. Welcome back. Business investments. You guys see the title on this one: the housing market and zero down mortgages. What is happening right now? That's what we're going to get into. I don't understand how we're circling back to something that was back in 2004. It put a lot of people into a lot of bad situations, considered as a predatory type of loan, and now look how creative it is circling back around. I'm going to tell you some of the pros and cons about this whole zero down thing. And right now it looks like Bank of America is the one that's headlining this. And then I'm going to explain, after I say pretty much the pros and cons, I'm pretty much going to tell you don't do it. I think I just said don't do it, but some people are still going to do it. There might be opportunities where you could do it and it does work out for you. But before we do that, you know what I need you to do? I need you to like, subscribe, follow, get into that stuff. Get it all squared away, whether you're on any one of those channels, right? And then come on back and let's get it on. So here's the deal. So we got zero down mortgages, according to Bank of America, with all these great things that they're talking about, but we just don't understand why. Everything looks beautiful, right? So we're talking about no PMI, right? Zero down, zero closing costs. They're not looking at your credit. Wait, let me check the list here, because it's just no money down, no PMI, no closing costs, no minimum credit score. What does that mean, right? So I'm trying to understand and be fair about this without beating them up too much about it, but I'm going to explain to you guys. All right, so if you're looking at it, you're probably thinking, you're like, well, what's so bad? I mean, if you qualify at the rate that you come in at, right? And then you can afford the house that you're in, right? Okay, that's great. And you get this amazing, mortgage. You put nothing out of pocket, right? Okay, not so bad there. Okay, you're not getting hit with the mortgage insurance. Okay, great there. All right, wait, no, don't stop. My credit not affected? You mean you're not looking at my score? Nope, not looking at your score. What? What do we do? Let's go for it. Pump your brakes for a second. Let's just hold on. Wait. All right. So, first of all, it is a pilot program through Bank of America. That's one. So, it's not offered everywhere yet. It's in select states. I put it in the description, but I will tell you it's Detroit, it's Los Angeles, it's Charlotte, it is Miami, and it is Dallas, Texas, right? So what are they going after? They're actually talking to the different lower income areas. Okay, so they're trying to, I think it's on CNBC, where they actually say that they're trying to bring up the Hispanic and African American is what the title is. I like to say dark skinned American, but they're going to say African American minorities back into the purchasing game, right, for homes. So I feel like it's one of those things we used to say when I was in the Marines. We used to say good initiative, bad judgment. It's because, all right, so I get what you're trying to do, and it sounds almost too good to be true, right? So, oh, wow, this is great. There's no such thing as a free lunch, guys. There's no free lunch, right? So be careful with stuff like that. But I'm going to break it down to you on how this works in a second. But before I do that, I actually want to go into this. And what I'm going to do is I'm going to go ahead and put me picture in picture. And we're going to set this up. And I'm going to read to you guys exactly what some of these stations say, right? Because what they actually get into and what they explain about how some of these programs work, it's like it's pie in the sky, right? You're like, hey, how can we go wrong with this? I don't understand. It sounds great to me. What's the problem, Justin? You know what I'm saying? All right, so I'm just gonna jump right on over. So let's just get there. All right, so according to CBS News, it says Bank of America is launching a mortgage with no down payment or closing costs that aims to promote homeownership in minority communities in 5 U.S. cities. That's the 5 that I told you guys about, right? Okay, so he says the new program is geared towards first-time home buyers, including in designated neighborhoods in Charlotte, Dallas, Detroit, Los Angeles, and Miami. said that, right? Okay. Bank of America said that its program will not take borrowers' credit score in account when applying for a home loan. Instead, credit worthiness will be based on such factors as timely payment of rent, cell phone, insurance, utility bills. Sounds great, right? I get it because it's more accurate, it's current, it's things that are necessary. But what about the other money that you borrowed? You should still kind of be judging your credit cards, things like that. That's kind of what we're getting back to, right? So let's not ignore that. All right, so going on, it says Black and Hispanic families typically don't have a large stash of cash on hand for a home down payment and closing costs. So Bank of America is removing those barriers will certainly help someone on the hunt for a home. Indiana University finance professor Jim Zhu told CBS News. I have a problem with that statement. I'm going to explain why in a second. If you have a program with no down payment and no closing costs, it can help minority families to fill the gap between available savings and upfront cash needed. Now, to qualify for the home mortgage program, applicants must seek to buy a home in one of the 5 states. Now I got to get into that. I want to bounce back over to CNBC and see what they said here. CNBC, they said who's eligible, right? While the government programs are bringing Black and Hispanic borrowers closer to homeownership, people of all races can qualify for the Community Affordable Loan Solution. Okay, all right. Okay. Here's the problem here. Now that I've read you all that, okay, and you have focused on this entire topic of a zero down mortgage, it all sounds great, right? And you're like, Justin, why are you beating this up? Here's why. What do we know about the current state of the economy? We understand that houses are above what they should be asking, and sellers still are kind of stubborn about coming down. Some of them are holding off a little bit. Some listings are kind of holding back. You got a lot of for sale by owners because they want to try to do it on their own and they want to skip out the agent, forgetting that there's about a stack of papers that they are responsible for. But that's a liability a for sale by owner person that thinks that they're willing to take on. That's a whole other conversation. Shame on you. And so, all right, what's the problem? Well, with the market prices being what they are, let's say, for example, a $300,000 house. You find a nice little 1,200 square foot, $300,000 house here in South Florida, which is probably rare right now, okay? And it's in let's just say it's in a non-HOA community. Let's take that cost out real quick. And you got this great home, okay? You get into it at 000, like they said. No money down, no credit score, no closing costs, no PMI, right? Okay, excellent. Sounds amazing. Still sounds like pie in the sky, right? Okay, follow me here. So here's the thing. Prices start coming down. A year and a half later, because what do we do know? Unemployment is what it is right now. So a lot of places are still kind of laying off because the economy is doing what it's doing. A lot of businesses are cutting back. There's quite a few reasons why businesses are cutting back. Not only because supply is ridiculous right now, not only because fuel is cutting a lot of businesses out of the circle when it comes to transporting goods, so they have to cut back on their supply. The supply chain is behind as a result. Therefore, prices on goods are higher. Therefore, the cost to pay an employee is higher, especially with minimum wage having gone up because our government at the time thought that that was an excellent idea to stimulate the economy and boost morale. Nope, screwed us there too. So as a result, the business owner can't afford to have 5 employees, so they have 3. But wait, right now that they have 3, they can't even afford to pay 3, so now they're down to 2. Those 2 people are doing a task of what was 5 people, but now we have an issue. Now they can't even get to work because gas is too expensive, right? So got a lot of people that work from home and all. You see the chain of events that starts to happen now as a result. Okay, follow me, right? So you just bought that home at 00000, all these no's down, right? And now you can't afford to pay it anymore because you or your spouse or both of you are without income. So you're bouncing around job to job trying to make those payments. So a year and a half later, 2 years later, your home's not worth $300. Your home's worth $290, $285. because the market finally balanced out a little bit and you were affected by like maybe $15,000, $10,000. Okay, you want to resell. See the loss? All your closing costs and all the other great stuff. Now to sell that property, you're at a nice little negative. You probably need to come out of pocket about a nice $20,000 and change. Where's that coming from? Right? So is the buyer going to spend more for that house, or are they going to want that discount deal? That's assuming that they put in an offer at $300,000 because you're trying to sell it at $300,000. We all know that doesn't happen. See the problem? Why am I saying that? Well, you're focusing on, unfortunately, the lower income areas where there's already an issue with income. Instead of trying to put them in situations where you want to write these loans off because you're a lender and you make money writing loans and then selling off these loan packages to other smaller banks or larger banks, whatever the process is there. I'm not a mortgager, but I can tell you that you sell money, right? This is what you do. This is what lenders do. You sell off those B, C, and D class loans that you just wrote that are probably going to go south. Because income is what it is. You're doing all of these waivers because you know they typically don't qualify. And you're hitting select cities as a test because that's your way of saying that you're trying to introduce it, and you know that those cities have a decent purchasing demand right now for property. You see the failure that you're setting yourself up for? Be careful with that. Here's a better question. Are you doing what you need to do to improve your own personal finances at home? If you're fixing your credit and you're working to get the better job and you're putting money aside and your income is improving as a result, and 2 years of W-2s show that you are reporting all your income, whether you work as a valet driver or you work somewhere where they're actually cutting you a check and it's documented with FICA and everything reduced. Okay. Report your income, do better, make more money, pay your bills, live within your means, and you will qualify normal. There's no free lunch. Guys, don't jump on the free lunch train, okay? That is a huge problem. Sounds great, not great. Just putting it out there, guys. Thanks for checking in. Don't do the zero down. See ya.